Good evening and welcome to the weekend edition. My name is Peter Resnicek from ShadowTrader.net. Market's in a free fall, obviously, but you don't need me to tell you that. So I'm going to try my best in this entire program to only be looking forward. And that's why the name of this video is called The Market Will Bottom Here, because I want to show you the exact technical levels that I'm looking at for where I believe the market is going to have a turn, which could come as quickly as next week. All right, beyond that, we're going to talk a little bit about market internals because they shifted a lot today. I wanted to specifically show you the difference between how they look on days like this as opposed to days we've talked about in weeks past where there's been a lot of sector rotation. Now everything seems to be falling at once. We're going to look at Fed Watch because now the odds have changed for the next meeting, so that's very important. A little bit of the fundamental take, couple charts to watch, and then wrap it up also with a number one draft pick. All right, without further ado, let's get into it. We're going to kick this off as we usually do with the weekend review. Okay, so weekend review, obviously a lot of red across the board. That front end of it that you see on the left part of the screen talking about the indices and the sectors, that's not really where it's at. There's some outliers more on the right, but let's go left to right like normal. Let's just look at the indices here. Absolutely devastating week for equities. I mean, basically 8% around the board, across the board, excuse me. And when I show you the weekly candles and you see how big this is, I mean, it's, we haven't seen something like this in quite some time. And the sectors obviously mirror that. But again, what's most important is were there outliers? And this week there weren't, especially on Friday, everything was coming down. All the 11 sectors were down more than 0.5% from their respective opens on Friday by the time the market closed. So that means that on Friday, there really was no place to hide. So you're starting to see more of like just throw everything out. Whereas in the beginning of this move, it was kind of tricky because there was a lot of sector rotation. You still saw defensive sectors such as utilities being strong. You saw money going into consumer staples as it was going out of consumer discretionary, et cetera, et cetera. Now that's not the case, especially today on Friday, April 4th. Everything really got sold pretty heavy. And you can see that across the board in terms of these these percentages down from Monday's open. I just need to always remind you. I mean, look at energy down almost 15% from Monday open to Friday's close. Technology down 10. Even utilities, which is a haven, they still finished down on the week, but as you can see, only down 2/3 of 1%. So a little bit of defensive action there. Real estate down 6. But here's where it gets interesting, as I was saying, on this right side of the page. If you recall last week, bonds were one of the charts to watch. And I was saying there's potential that this now becomes a haven trade. And it did this week. The bonds actually moved up and yields moved down. And it kind of makes perfect sense because if there's going to be some sort of demand destruction in America from what's going on with these tariffs, and if we do indeed slide into a real recession, a little bit more on that later, you would expect yields to come down, which of course brings bond prices up, right? It also brings crude down, which really had a really bad week, down 10%. And that's also, I think, kind of in anticipation of potential demand destruction. Gold came down about 2%, but not too much to worry about because obviously it's off these super high levels, like way over 3,100. I am still selling puts on the gold futures, and that worked out very well this week as well, and I'm going to continue to be doing that. And Bitcoin was kind of an outlier, and this is important, especially for those of you that are into crypto, because I've been talking a lot about Bitcoin being specifically a risk asset and not defensive at all, and trading basically with the market. And you would have thought if that was the case that Bitcoin would have been down a lot more, and it wasn't down at all. Bitcoin actually tacked on a 2% gain from Monday's open to Friday's close. So this is noteworthy, and this could be due to changes in policy coming out of Washington, certainly a more pro-crypto administration. Bitcoin seems to like that, but regardless, the fact is that equities are selling off hard and Bitcoin is not. Now, that doesn't necessarily mean that a turn to the upside in Bitcoin is around the corner. It could certainly wallow at these levels for a while, but it is noteworthy. It is something to look at. So you may want to be selling some puts in some of those high IV names, MSTR, some of the miners, etc. Either way, something to look out for, the fact that Bitcoin kind of holding its own this week. Okay, what's really going on? Where we get into the technical picture of the major averages, S&P, NASDAQ 100, and today we're going to look at the Russell as well. So as I was saying, we want to be looking forward, not back. Obviously, it was one of the biggest down weeks we've had in a long time. As a matter of fact, it was the largest down week since 2020, and we know what was happening then. That was the COVID crisis. So huge week down. You can see the ugly red candle here as we moved lower after consolidating for a couple of weeks. And that's why I was saying that in here, I felt like this was kind of a tricky environment to trade in here because there was so much back and forth and a lot of sector rotation. There was less rotation this week, as you can see, because obviously we had a much cleaner move to the downside. Before we get into the support here, which is going to be this trend line here, I'm going to show it to you on a longer term time frame so you can see it clearly. I wanted to point out that the markets today on Friday took out this support pretty cleanly and were able to actually close below it, and that's noteworthy. That was really the area where the market, it did have some bounce intraday. I will say that. There was a bounce there intraday, but it didn't hold into the close. We actually closed far below. Notice that low is 51.19 and a quarter, and today's close is 50.74. So you really took it out by quite a bit. And that in and of itself indicates to me that I think it's going to be lower next week. Certainly, the shape of the candle also has something to do with it. Closing dead at the low on a huge expansion of range on a weekly bar like this indicates to me that there will still be more behind it in the next weekly bar. So we'll see. Now, if we switch out to a monthly chart, here's where the support comes in, and here's where we're going to be looking ahead instead of in the rearview mirror. Put your chart on a monthly, and boom, look at the COVID lows here, and look at how perfectly you have your trend line support right here, and it's going to come right in here. And this is approximately 4,700. You want to move your crosshairs not to here, but kind of 1 week forward and put it right there. And look, it's 48 actually, around 48.01. And that's not that far away. We're at 50.74 right now. That's 275 S&P points. And in this market with this type of volatility, I mean, it's not that much. We can easily be there next week. Notice also from a straight technical perspective how well it ties in to prior highs. This is beautiful right here. Look at this. It literally goes like right through the center of the line. And that is also really important. And for me personally, I'm going to be watching this super closely. I'd like to do a long trade right there. When I see the confluence of technical supports at the same level, that gets me more excited than if it's just one data point. This is two data points together in that you've got the longer term trend line on a monthly all the way from the COVID lows, and you've got a prior high where the market broke out. Generally a buying area. So I'm going to be watching very, very closely to try to pick something up there next week, and I think that's a level everybody should be looking at right around that 4,800 area in the S&P. All right, let's move over to the NASDAQ 100. This one's slightly different in terms of the monthly trend line. I'm going to stay on the longer term trend line here and just point out that the distance right now from it is probably too far to do it next week. So I would say just use the S&P for your TA, and if there is bottoming action in the S&P around that 4,800 level, but you'd rather trade NASDAQ, just buy the NQs at the same time. I mean, they're not going to be disconnected in that manner. Just buy the NQs then, and you should be just fine. And look at the prior high here, right there. And we're actually getting very close to that, so that could tie in as well, right? If the S&P goes to the target, maybe the NASDAQ does this and goes to the prior high, and that's the turning point. And as far as a carry forward in the narrative going forward, I'm going to note that even if there is some sort of a playable bounce here, the NASDAQ is still way above trend and could certainly correct further. There's no doubt about that. Even if we do get a bounce there, that's something you're going to be wanting to be monitoring for continuation very, very closely. Could it be just a one-day flash in the pan? Could it be a half a day? Could it last a few days, preferably? Or it may not happen at all, right? I think there's going to be some reaction at that level. But if you're back at that level within, I don't know, 2 hours, it's probably not going to hold, right? Remember, the shorter the time period between retests tells you that it's going to probably go through. When you have a bottom here and then you have another bottom here a month and a half later, that's a bottom you want to buy. But if you're looking at a daily chart, for instance, you have a bottom on a Tuesday and then like Thursday morning, you're there again, you don't want to buy that bottom the second time, right? That's probably going to break. You need that time in between. So in this case, I would expect that if we do get some reaction at this 4,800 level, I would expect that bounce to last a few days. But even then, that's not that long of a time period. If it goes up, let's just pick a number. Let's say it goes up 3 days, and then the next day is really bearish, and you get a big red candle, and you retest that area again. Well, it's not a buy the second time. It's signaling to you that it's probably going lower. All right, let's wrap this up with a quick look at the Russell RUT. And this one's a little bit different because the trend line is actually broken. I'm not surprised because small caps showing some relative weakness here. But look at the prior lows here. This is a very strong support around this 1600 level in the rut. Also kind of ties in with some prior highs right here. So this also could be in play on the Russell. And the Russell to me is kind of a very back and forth, very back and forth type thing. A lot of vol all the time, even when there's not a lot of volatility in the market. Like this is a huge balance area. But within that balance area, look at how violently it's like 1 week up, 1 week down, 1 week up, 1 week down. So as far as a bounce is concerned, if the S&P comes into that level, which I'm going to be keying off of, Russell could actually have a pretty good bounce there because we know that it has many times in the past. And obviously there's some sort of demand here in the low 1600s, right? So that is basically my technical outlook on the three majors. Again, keep it focused on the S&P. I think that's the trend line and the support level that's going to come into play. First, it's obviously the most important. It's the broadest. I wouldn't say it's the broadest measure of the market. Obviously, the Russell is wider, but the S&P is the benchmark, and that's really what matters. So again, low 4,800s is what I'm going to be watching for next week to be buying this market. Let's shift over to market internals for a moment, under the hood, if you will. I just wanted to point out a couple of things here. This is all data from Friday, but you can see here, for instance, in the weighted AD and a little bit here in the iceberg tick, I guess in the whole thing, it goes back a few days, but I'm really just kind of focusing on Friday's action. And I wanted to go over this just quickly because very often in this particular part of the program, I point out to you market internals that are very mixed and they don't really have all sellers kind of pointing in one direction or all buyers pointing in one direction. There's a lot of sector rotation. And I just wanted to show you that that really wasn't the case on Friday. Look at, if I move this down so you can see the sectors, all these are measured from the open. And look at the amounts here, down 3.5, down 4, down 4 again. This is all from the open. And just really, really weak. The dark red, just as a reminder, always is that you are down more than 0.5% from the open. If it's less than that, it's pink, and then it's light green, and then all the way to dark green if it's up more than 0.5% from one open. And this market, at least last week, if you recall, last week was characterized by a lot of sector rotation. That's what made this very difficult in terms of getting short the market, because there was constantly, you would have a day where you would have a relatively bearish close, but a lot of these sectors would be like dark green, and you'd have this sort of mix up and this sort of push-pull. But so I just wanted to spend a moment on this to point out that you weren't seeing that as much this week, and certainly not on Friday. This is all the from the open percentage changes on Friday. Breadth was very bad on the NYSE, 12-1 negative. On the gap down this morning on Friday, it opened 37-1 negative. Wow, but that generally gets adjusted throughout the course of the day, but so many stocks just gapping down. NASDAQ into the day, 6-1. The advanced decline lines were pretty much pegged all day. I've said this before, when you get numbers that are like 2,000, 2,500, whatever, those are really bearish, and you had that. Look at the NYSE was minus 2,300 and the NASDAQ was 3,000. When you see that early in the day, let me give you a tip you can use, okay? Pro tip here. You see that early in the day, the odds of a trending day greatly increase. You can short pretty much any bounce on those days if you have NASDAQ AD like down 3,000 like that, okay? It's not so cut and dry if that advanced decline line is down like minus 800 or something like that, minus 1,100. But when you get these readings that are in the 2,000 to 3,000 level, you're generally going to get a trending day, or at the very least, any type of technical bounce you can find oversold, like up to a 21 EMA or VWAP or whatever, it's going to get sold. And we clearly saw that today. Moving into the weighted AD, as I always say, worth its weight in gold. This is literally the best thing we have for sale on our website. If you don't have this yet, I really highly recommend it. This is a game changer. It will help you so much. It's a pictorial representation of what's going on with those 11 sectors I just showed you in the boxes, measuring it all from the open, but translating that into a histogram that you can read much easier, but most importantly, a histogram that is weighted by the weights of the sectors. So that means that if utilities and materials and sectors like that go down hard, it doesn't have as much effect on the histogram as technology and healthcare and financials and things like that. So it really gives you a good read. And you can see that this is a classic upper left down to lower right picture here in the weighted AD. It never gets positive and it just stays low. Even on the bounces here, that's always a good signal. Is that, I talk about this constantly in my trading room, in the weekly options room. I point out when this goes positive, when this goes negative, and I'm always often saying things on a day like today, like, we're coming up to resistance here. Weighted never went positive, for instance, and lo and behold, it never went positive. Market continued lower into the close, so keep that in mind. Iceberg tick is the other fantastic indicator. I find that, since we've been selling this stuff for a while, most people who come to our site and purchase indicators, they generally purchase these two together, and that's a great thing, because anytime anybody emails me and says, which of this stuff should I buy, I always unequivocally say it's weighted AD and iceberg tick together, especially if you're a daytime frame futures trader. Iceberg tick is basically just showing you the NYSE tick. And you can set it to any tick. It's fully customizable. You can put a tick on the S&P or whatever. But it's basically showing you how much time was spent above zero or below zero, because it paints the mountain chart underneath and above. That's why we call it the iceberg, because it's either above the waterline or below. And then we call it the paint. It puts the paint in between, inside like this, and that then shows you how much time was spent above zero or below zero, and that's more important than anything in the NYSE tick to see if you're going to get trending. You can see here how so much more. Look at this first hour. In the first hour, there were barely any positive ticks, so the market just keeps going lower. Any spot can really be shorted. And then the other thing that we look for, which you don't really need the iceberg for, but it looks a lot prettier just seeing it on the screen, is the fact that on a trending day, you want to note how many minus 1,000 reads you get on the NYSE tick. When you're getting a lot of them, that's a trending day lower. And you can see here in the first hour of trade, look at the minus 1,000 ticks. I mean, the low tick of the day was 1,501, which of course is very low, but you spent the majority of the first hour just banging against that minus 1,000. And then as the day developed, it happened again here, 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 a lot of time here, here, here. I mean, it's just too many to count. It just keeps happening. On a normal day, you may get anywhere from 1 to 3 or 4 minus 1,000 ticks on the NYSE. When you get this many, you know that they are selling it hot and heavy, and it's just keeping the pressure on, and that's certainly news that you can use. All right, so just a little bit of a dip through market internals. Links to these are right in the description. It's also right here at the Chiron, shadowtrader.net/indicators. Okay, Fed Watch, real quick. I wanted to have this segment with you today only because the odds of a cut for the May 7th meeting increased a lot this week. If you recall, we look at this relatively often, and there wasn't that much odds of a cut in the next meeting in May. It was being pushed out to June, where there were stronger odds of a cut. Now there's odds, starting to pop up that we're going to see some sort of cutting action in May. So if we take a look at this, now it is 30% here by the end of the day. This moved and shifted a lot today. There's about a 70% chance that we stay the same, 29%, but it is rising because look at the trajectory, so to speak. The 400 to 4 1/4 1 week ago, it was only 18% chance, and then a day ago, it was 21.9, and now we're at 30. So it is rising steadily. So just pointing this out as something to keep in mind. Will the market turn ahead of that? Will this cause the market to turn? Obviously, the market loves rate cuts. If we come in a little bit, we will see. Will we even get it all, right? So far, it's only a 30% chance. What I would suggest that traders do is between now and May 7th, start watching this at least every couple of days to get an inkling to see what's going on with this bar right here. Is it going to stay the same, get lower, or get higher? Obviously, the higher it goes, I think if it gets past, say, 60, 70%, now you've got a pretty good chance that that cut may be happening in May 7th. And of course, as we know, markets like that, and it could have outsized impact on what equities do around that time. Now to the fundamental take. I don't do this that often, but often when I do, I talk about the unemployment rate because it is a marker for if we are going to dip into recession. And certainly what's going on with the tariffs right now has potential to tip the economy in that direction. And if so, we are probably going to see some sort of a blip up in the unemployment rate. That hasn't happened just yet. Every time we've talked about this, it's just baselining around that 4 to 4.2. And today was a release on Friday, April 4th. This morning was another release of the unemployment report. And once again, we didn't move much. We moved up 1/10 of a point to 4.2. So I've kind of blown up the chart here just so you can see the action from April of 2024 and going right out here to the current read. And again, we're at 4.2. So not a lot has been happening, but you can see that this 4.2 is kind of a ceiling. So about 1 month from now, be watching closely and see if this ticks higher. Obviously, every Thursday, you do get employment data that sort of foreshadows this. We'll see. But again, this is really the big one, I think. And we'll see if in the next read, a month from now, if we tick above that 4.2, and again, that would be more indicative that there's potential that we are like tipping into a recessionary environment. Charts to watch. This is where we get into some key charts that I think everybody should be looking at, mainly because many of these are a barometer or potential barometer, I guess, for what's going on in the market, and may be data points that you can put together with other data points. And that's a very, very key thing to say, because remember, one data point does not really make anything. You need to put multiple data points together so that you know that all your planets are lined up, especially if you're trying to do something like buy that 4,800 area low next week. You're going to want to see more than one data point line up. So to that end, we're going to talk a little bit about these charts to watch. First one is bonds. If you recall, I talked about it last week about the potential for bonds becoming a haven trade, and it appears this week they did. Bonds were very, very strong this week. You can see on these ZBs, which is the futures for the long bond. I talked last week about the trend line break here, which really was what I would call an undercut, basically. It's like a fake out move, didn't really work. And after that, they strengthened right back up. And notice what they did this week. They actually broke this short-term downtrend and actually moved higher. And more importantly, took out a resistance point right here. This was a prior high here in the bonds around the 120 in the long bond, and it actually went higher. So this could actually continue. So be watching for that, for any strength in bonds. Obviously, if you're going to look at bonds, you've got to look at rates. That's the TNX CGI right here. Those collapsed big time, under 4% this week, which is noteworthy. And obviously that moves opposite. And I also want to talk about the dollar a little bit, because the dollar has been kind of looking to me the same as equities. If you look at this move down, how it's sort of cascading lower in this pattern, it's relatively similar to equities. And I'm noticing this area here in the dollar index. What if the dollar moves down further and corresponds that S&P low with the dollar low at the 100 level on the dollar index? Could be interesting, right? So something to watch for to see if there's that pullback to that area. I would say regardless, even if it doesn't have anything to do with the equities, if you're not using this as another data point, it's a buy point for those of you that are into FX, right? So if the DXY comes into this level, right, then from that area, the dollar could potentially strengthen, and you would want to be, for instance, shorting Euro USD, etc., shorting any currencies that are quoted in dollars, because a strengthening dollar would bring that chart lower. So just something to think about there. And last but not least, I want to talk about gold a little bit, because gold is, as I've been saying, has just been a great trade as of late. It's kind of been like a rinse repeat trade for me in terms of selling puts. And the reason I wanted to mention it, again, in the interest of looking forward, not looking back, which is the most important thing, is that we're coming into some key technical support here on the GCs. This is the current contract here, GC M25. And note that there's trendline support coming up right here. It's about, if I recall, in the 3020, 3016, 3015, let's call it like 3020 area right there. And look at, if I keep the crosshairs here, how well it ties in with the prior highs, right? There's prior highs here, all in that area, just a few points lower. And then beyond that, which is not that far away, is this key round number at 3,000. And this is very, very important, because I think that's the number one reason why gold had difficulty breaching this level here, because it was the psychological number. So obviously that old resistance should become new support. So you've got trend line, and you've got 3,000 big number, and you've got prior highs. All of that to me is setting up a buy point in the yellow metal potentially as early as next week. Time now for our number one draft pick, where I leave you with one good solid idea for next week that could be potentially in play. And this week's is Nike, ticker NKE. Daily chart has been kind of ugly here. Wait till I show you the weekly and the monthly. It's even more ugly. The low that we are at here at the 52 area, I'm going to show you in a second why I think it's potentially to be supportive. But just right off the bat, notice that it gapped down with the rest of the market today, but it was actually quite bullish. And that is because the news was that President Trump had a discussion with the General Secretary of the Communist Party of Vietnam. And they talked about tariffs. I'm sort of reading this from my briefing here, saying that Vietnam wants to cut their tariffs down to zero if they are able to make an agreement with the U.S. And as we know, Nike and other shoe manufacturers do a lot of manufacture in those areas, in Cambodia, in Vietnam, etc. So this was bullish for the stock. But let's look at the longer term picture here. If we go out to the weekly, you start to see just how bad this has been. But really on the monthly, it tells the tale. The high of 179 down to the low right here, which is 52.50, that is over a 70% decline. Just think about that for a second. 70% down from the high. So just that in and of itself to me feels like there's potential that you get some sort of a turnaround if the stated sort of easing in the tariffs between the two countries actually happens. The stock could easily fly much further. I'm thinking on a technical level, see this area right here of consolidation, which is noteworthy because it is the area of consolidation that preceded a breakout that set up the move all the way to the high on the monthly. That's noteworthy. That level is tying in kind of right where we are right now. Like if you look at the low today and you just draw the line straight across, notice how the line pretty much goes right into the middle to the low end of that consolidation. So there is some technical support here that you can hang your hat on, not just this fundamental data about what's going on between the tariffs of the two countries, but from a technical level, it does seem like there is some support here as well. What would the target on something like this be? Understand that you have to play this long term and set it up on a monthly chart. So minimum, and I mean like bare minimum, if you're trading off the monthlies, then you have to use the TA on the monthlies like this and assume that you should at the very least be going for a bounce into this area, which I think would be like the 80 area basically, right into this area, because that's the downtrend line. So if the purchase is somewhere at, say, in the 60 range, right now you're at 57, right? That's not a bad move to at least get it up to 80. I mean, 20 bucks out of 60 is a huge percentage move. And then if the markets turn around, obviously it could go higher. But regardless, these prices down here seem like there is potential for a buy in Nike. All right, looking ahead as we generally end this show with, so we can see what economic data is coming down the pipe for next week, but also what earnings, and it's interestingly enough, the start of another earnings season and all the craziness that's been going on recently. It's easy to forget that we are through the first quarter of 2025, and that means that Q1 earnings are going to be on tap. And as always, they generally kick off with the banks and financial companies. That's just how it is. And you can see here towards the end of the week, that's when it's starting. We're going to start to get results from the banks and the financial companies. Insurance here on Thursday, Progressive, but then Friday is going to be very, very important with BlackRock, JP Morgan, Morgan Stanley, and Wells Fargo all reporting. Usually that bank stuff and financial stuff happens before the bell. So keep that in mind that next week, Friday, could be very, very interesting as those companies are going to be reporting pre-market. Delta Airlines also not really that much of a market mover, but I thought I'd include that one as well because it may have some inkling of what's going on with the consumer, right? We'll see if things are kind of contracting or expanding for them. Economic data relatively quiet for the beginning of the week. You see nothing on Monday, nothing on Tuesday. As always, remember, I only point to the stuff that's high impact, such as like CPI, initial claims, etc. So I'm not going to be talking about other data in here that's not that important. But the week is relatively quiet as far as economic data is concerned. And that is potentially bullish and market moving. I want to tie this together, if I could, as a data point. If we come into the support that I'm talking about, because if you're able to buy that low at the very least, there is no morning economic data pre-market that could disrupt that trade. And let's say we come into that support, I'd rather be in that trade overnight without numbers coming than with numbers coming. So it's going to be relatively quiet on that front. But towards the end of the week, it does ramp up, obviously. This is important. Initial claims, continuing claims. This core CPI and CPI, that's definitely a market mover, as is the PPI. So this is the consumer price index, and this one is the producer price index, and also consumer sentiment, which is going to be the preliminary number from University of Michigan, which means a lot more than the revised number. So that one is also important and could be a market mover. So bottom line next week, not too much economic data in the front end of the week, a little bit more weighted towards the back of the week, but that's also when we're going to start to kick off the Q1 earnings season, and the financials and banks will be on tap for Friday. And that's my show for today. Thank you so much for spending a little bit of your weekend with me. If I could remind you, please hit that like and subscribe button, and also the little bell icon so you are notified whenever Shadow Trader posts new videos. All right, to recap what has been going on in this particular program, mainly looking forward at that S&P trend line. 4,800-ish is your level, and in the NDX, remember, it's not the same, it's not the trend line, but it is a prior high, and that's 16,765. That's that prior high level in the NDX. Either of these could be supportive, but as I was saying, I'm watching for that S&P 4,800 a lot closer than anything else. All right, keep an eye on bonds, potentially moving higher. Keep an eye on rates, keep an eye on the dollar, and two things to buy next week if they do set up potentially. Nike holding the support that I had this morning around that low 50s area, and also gold coming into the trend line, the 3,000 level, and that prior high where it was breaking out, which is also roughly right at that 3,000 level, could be very interesting as well. All right, as always, coming at you from beautiful Los Angeles, California. Be safe out there. Volatility is really elevated. I wish you good trading and good night.